Hello, today is Thursday, December 21st. And we wanted to talk about market action yesterday and what the driver was. Now, there's a lot of head scratching as to what exactly drove this very large 1.6% sell-off, as you can see here in my trading view screen. And a lot of people initially thought it was a treasury auction that didn't go so well right around 1 o'clock. But as you can see, the equity market held up pretty well, really through about 130 to 145, and then selling started to accelerate. As we mentioned before, there's a lot of confusion as to what maybe was the trigger. You can see on this great article on Zero Hedge, Goldman notes everybody wants to know what happened today, and there wasn't a clear trigger. What we want to do is we want to show you what we think was the big driver, and that is options flows. Now, in white here is the S&P 500 from yesterday, and in purple is our hero signal. Now, what hero does is it measures the hedging impact of all the options flows that take place in real time. Now, as you can see here, about 1 o'clock, the hero signal hits the high of the day. People were very bullish into that treasury auction. The treasury auction, as we said before, didn't go well, and the S&P 500 didn't really react to that. But you could see that it started some selling, or what we call negative delta or a negative hero signal coming into the market. And that, you'll notice on the right axis here, was about $4 billion over the day of positive deltas or positive hero flow coming into the market. So a lot of call buyers yesterday, and that flow switched right around 1 o'clock, and it started to accelerate to the downside, really in two waves. And this preceded any decline in the market. So what this really is showing us is that traders were bullish and expecting little movement into yesterday's session, and suddenly that flow shifted at that treasury auction. And we think as the market started to roll lower, the options flows accelerated the selling. Now, what's interesting about this is that if you break this down and look at the next expiration flow, what you can see is that the teal line, which measures only 0 DTE flow, or options that were expiring yesterday, you can see that that flow really picked up around 1:30 and moved sharply lower, along with what we call flow from all expirations, which is the purple line. So the fact that the purple line and the teal line are really overlaid on top of each other here tell us that the predominant driver of options flows was 0 DTE trading. So in other words, right at about 1:30, 0 DTE traders came in and started really pushing the market lower. Now, we can tell also, we can see whether this were puts or calls. We can break that down. And so what you see here is that we now have four lines. The green line is calls from 0 DTE. The blue line, the light blue line, is puts from 0 DTE. And again, you can see here that it was 0 DTE call selling that picked up right around that 1:30 time. That's, again, the green line going lower. And then what's interesting is that about 2:30, you could see suddenly 0 DTE put buyers come in and really push the market down for a final kind of crescendo. And so what we think is that it was these 0 DTE flows in particular that really hit the market hard. Now, tied to this, and this could be seen as possibly hedging flows or maybe a separate type of flow or mixture of both, we note that there was a big spike here in E-mini futures. This comes from Goldman via the Zero Hedge page. We'll put this in the description. And if you zoom into that Zero Hedge E-mini chart, you could see that indeed right around 2:30 here was a big increase in E-mini futures and a real crescendo at 47.50. Now, 47.50 corresponds with this 4,700 line that we've been flagging as a very kind of significant support level. This is our risk-off level at 4,700. So again, these big options flows pick up, and then you can see an increase in E-mini futures flow at the same time, and the market really shifted sharply lower. Now, because these flows were predominantly 0 DTE, we think that there's a good chance that the market bounces today. Again, today is Thursday, it's December 21st, because these 0 DT flows, there's no reason for them to be back in the market today unless traders want to renew their short position. So we think there's a great chance for a bounce. If we do break 4,700 here, then we think that there's a good chance of a longer term, more sustained sell-off.